Hello friends, this is Reddy from Wealthy Options. Welcome to another episode of Zero DTE Pulse. Today is SENSEX Expiry. I must say that this is another back-to-back cool SENSEX Expiry. But let's get into the details. Right. So from the underlying point of view, I think SENSEX opened, absolutely flat. It just opened, wherever it closed yesterday. However, in terms of premium, I think yesterday the straddle premium closed around 460 rupees and it opened around, I think, 390, 400 rupees. So basically, straddle premium, opened with overnight decay of around, I think, 60 points. And then I think the premium available at, around 916 was somewhere like, 390 or 400 rupees. So 400, so maybe around 4, let's say, we can call it as like around 400 rupees. And in next 3 to 4 minutes, it kind of gave a feel like it started going up, but it's not like a shooting up like a 40, 50, 60 points and all. It started moving towards like 400 to 415 and 420 levels, which is not a big deal. So whether you have a big SLs or small SLs or whatever the type of SLs, so that sort of small move in the up move in the straddle premium do not affect much. And at the same time, underlying from the opening, if you look at the first 10 minutes of price action, SENSEX sort of moved 200 points from the day low to day high in the first 10 minutes. So that's it. After that, I think the SENSEX went into a complete consolidation mode. It started trading within the range of just 150 points until 250, and during this period it's a massive linear decay. It's the same kind of a pattern compared to the last week. The only difference is I think last week we had a slightly better premiums, like straddle premium opened around 450 or 460 levels, but today the premium was slightly less. It's not too bad. It's slightly less. Anything at 450 is a decent premium for SENSEX at current levels of IVs, but if it is 400, I would say it's a short of 40 to 50 points premium than usual premium what we are supposed to get it. But if you look at this decay, it's absolutely linear decay. So throughout the day, it was a linear decay. I think by 11:45 itself, the straddle premium fell down from 400 levels to kind of a 150. Obviously, so given you still have almost like a 3.5 4 hours time to expire, so it went into the straddle premium went into a consolidation mode for an hour, and during that time the straddle premium moved up by 15 to 20 points, which is not a big deal. And after that, it's a absolutely linear decay till 250, right? And after 250, there was a big move. I'll talk about that, but I think even that has not given a big dent. Yes, it would have. I think it has taken out profit for some of the traders. A portion of profit, I would say, like 0.3 to 0.5%. Had that move not happened, probably most of the option sellers would have got even more profit, but that happens. So as you could see, as SENSEX started trading throughout the day, when it traded in 150 points range, and also it formed a pattern of this is called ascending triangle. So generally, if you see these kind of patterns, so there is a higher probability that the SENSEX may break out on the upside, right? So price is coming down, and then when it is going up, it is not making a further lows, and it's not even coming to the the same point as the day low to mark it as a double bottom and that sort of. So these kind of a price action indicates bullishness, and overall even if you look at hourly charts and even the daily charts, SENSEX is in a bull mode. So this is sort of kind of expected. It may not happen, and I'm not saying this happens all the time, but the pattern, the behavior of the pattern is, so there was a probability of breakout on the upside, which potentially happened from 250. So by 250, I think the premium straddle premium was around 35 rupees, so nothing much was left on the table. And because of this big move, and especially in this candle, when it broke the day high, so straddle premium jumped to 66. It's a jump of almost like a 30 points, and it's a big directional move. So if you look at the bottom to top, Sensex moved almost like a 400 points within the just 20 minutes. So I was looking at the call options, 83,600 call option, when Sensex was here, it was trading around, I think, 1 rupee 80 paise. It went all the way up to 129 or 130 rupees. So that's a kind of a move, it came. But in terms of my positions, many of the positions they already captured a lot of decay, and some of the trialing on the call options, that saved to not to take a big loss. And the puts, because it's a directional move, so whatever the premium was left out on the puts, so that was that completely gone to zero, and that saved it. And apart from that, so during this kind of a breakout attempts happened, so luckily some of my algos entered 83,600 straddles with a skew, like call premium was very less and put premium was pretty high. And during this down move also, the put stop losses didn't hit. So but this big move came for most of those entries. The call options got the call option premium was less, call options were stopped out, but the put premiums with huge premium, they went all the way to sort of zero. So that sort of saved me from not giving up all of my all or even the small amount of profits. So I think during this time also I was with a profit of, I think, 1.3% or 1.35, and during this up move, because 600 puts had quite a lot of premium, so that even helped me to get another 0.1% of additional profit, right? So if we take out but even otherwise, I think most of the option sellers, wherever they sold any straddle or strangle, I think they would have made a money. So this move, if they had escaped with a small loss, so obviously I think they would have made good profit. And those who took a bit of a knock also, I think they would have probably given up, I think, 0.3 to 0.5%, which is not a big deal, considering the kind of the premium decay we have seen right from the opening of the market till the very end. So so at the end of the day, so that's what happened by end. So yesterday Sensex it closed wherever it opened. Today I thought it may be a sort of repetition of same. I was basically expecting a close around 83,500, but it's not in our hands. So finally Sensex settled at 83,700. Which is about, I think, 270 points up move in Sensex compared to the yesterday closing. So in terms of profits, this account closed with 2.83 lakhs profit, and this one is with 50,000 profit. The other account, this one with 2.55 lakhs. Overall, I ended with a profit of 5.9 lakhs, which is around 1.39% on my account size. So overall, it's a pretty good day. It's good to see that we have a back-to-back neat and cool expiry in Sensex, both last week and this week. And particularly, it may be too early to say, and I'm going to wait and observe the premium behavior till end of the month at least. So what I'm going to say is, it's about the Jane Street. We all know, what happened with the Jane Street manipulation. So SEBI finally cracked on Jane Street manipulation, and they have banned Jane Street's 4 companies trading from India, so who they were causing the manipulating, especially the expiry day options. So they used to buy, they used to bring the small up move and then immediately sell with a huge quantity, as long as as amount as 20,000 30,000 crores of order value suddenly, and then because of that premium used to jump, and so that's how they used to manipulate the market. And I think if you have watched my previous videos, there were many times, for example, this is a clear consolidation pattern. Even if you see the last week Nifty expiry, so when the underlying is consolidating like this, today obviously the premium was dropping. This is what is expected from the premium. right? This is a natural concept, when the underlying is not moving and when the time decay is kicking in, when you are getting close to the expiry, the decay has to happen, right? If that is not happening, that means there is some other activity. We have clearly seen many times, and even the last week Nifty expiry also explained a lot. So underlying was consolidating, but we saw that the straddle premium was continuously going up, and then there was a big move, right? So it's, to put it simple, if the underlying is consolidating and the premium starts moving up, especially I'm talking about both calls and puts, and if the premium starts moving up, that means there is a suspicion that somebody is buying the options in heavy volume only with the intention of bringing the move either side, right? So that's what happened. That's how they were making the money, and they made money of almost like a 42,000 crores from Indian market in the last 2 years. But good that SEBI finally unearthed their manipulation activities. It was a 105 pages of a interim report with all the details, like how they have manipulated Indian markets, how much pain they caused to the many of the option sellers in the last couple of last year, especially 2004, 2024 and 2025. Fine, I think good thing is, today I have not seen any kind of a Jane Street kind of a manipulation in today's market, and I hope that that will continue. I believe that there might be some more players who may be doing some sort of a manipulation, but definitely not to the anywhere, but definitely not even anywhere close to the scale of Jane Street, right? So they have been using something like 35,000, 40,000 and 30,000 crores of a money to bring a big move, like you buy the options with the heavy volume and then just move the cash or futures market, manipulate it, and then mint a quick money. So to that scale, I don't think so there are any other manipulators in the market. There might be some other to the small scale. That will not be able to influence the markets, especially the indices like SENSEX Nifty, which are trading with a very high volume, right? So let's hope that that manipulation is behind us. But having said that, I would be keen to observe the premium behavior for the next 1 month to 2 months to say to take a confirmation, like whether that manipulation is really behind us or not, right? So I have seen some posts in Twitter saying that this move was they were trying to question or doubt, like or trying to attribute to the Jane Street kind of a move, but I think definitely not. I can say with the confidence, like you have a breakout. So when the breakout happens, what happens is most of the call stop losses would have got hit, and the people who may be running the breakout systems and call buying systems, so they would all got triggered, which means that there is this big and sudden demand for many of the call options. And so whenever this kind of underlying move is happening, and because of that there is a big demand for a call option, and existing short positions covering, that is when sudden spike happens. And because there is a huge demand, a huge unusual demand, so because of that the call option spiked a lot. As I said, 1 rupee 80 paise option went all the way to 129. As a result of that, straddle premium also for a moment, it shot up from 35 to 66, which is absolutely makes sense. Okay, so this is a very natural phenomena. And as the time value had to become zero, finally the straddle premium, it closed at 12 rupees. The only thing is, I think most of us were expecting like the closing was around 83,500, but it went all the way to 83,000, around 83,700. Yeah, so this happens, especially 3 p.m. moves. After 3 p.m, we never know what kind of a moves will happen, because that is when most of the money goes into the either short side or the long side in terms of an investor's point of view. Especially if the underlying was consolidating throughout the day, the probability of that sort kind of a moves either side is highly likely, and which is what happened today. Right. So all in all, it's a fantastic expiry. So I think all the options sellers are loving it, especially after the painful and May and June sort of months. So July seems to be like giving a relief, and let us all hope this will continue. So that's all I wanted to cover in this episode, and I'll see you in my next episode with the Nifty expiry day after tomorrow. Take care. Goodbye.